Welcome to SME On Point. I'm standing in for Diabo Seto. Digital payments are becoming an essential and convenient way to transacting for both consumers and retailers. However, cash payments still account for around 90 to 95% in most African countries. Yoco's Vice President for Commercial, Matt Brownell, says digitising cash-only retailers is a $19 trillion business opportunity that the informal retail market can take advantage of. I'm joined by him via Zoom. Thank you very much, Matt, for joining us. So why is it that some informal businesses are still reluctant to go down the digital route? I mean, one would think that it would be an obvious route to go, not to mention its safety. You know, what are they afraid of?
Well, I think the two things that make cash particularly relevant is the trust factor. You know, people just like tangible things that they can hold in their hands versus digital payments, which are not as tangible. And the second thing, of course, is speed. Cash is immediately in your hand, immediately available when someone has paid you for your services, and you can therefore utilize it straight away. Whereas there is a lag that happens with digital payments as the money has to get cleared into bank accounts and then becomes available usually within 24 to 48 hours later. So it's only really when digital payments can compete with cash from a speed perspective that it becomes, you know, something that is easy for people to adopt. However, as you say, the major factor with digital payments is the safety factor and the fact that it's just such a safe form of getting paid if you're a business owner. And the second factor, you know, is just the increasing trust which has been built around these products, particularly since the pandemic.
So the estimation is that this could be worth 19 trillion US dollars. I mean, that's absolutely huge. So why is it that fintech companies have been slow to actually encroach in these areas, particularly in African informal markets?
Well, actually, I'm not sure they've been slow in the sense that there is a rapid change which has happened in the last 5 years in particular, right across the entire continent, where fintech is at the moment perhaps the industry with the most momentum, with the most investment flowing into it, and where there is huge democratization happening across the continent. So yes, it was initially slow. Some of the original players and legacy players within the environment, you know, found it hard to go towards smaller and smaller businesses. It was simply easier to target big business, whereas many people did not see small business and the informal sector as worth the effort. The beauty of fintech and the democratization which is happening is that collectively we see the massive value of the informal sector and small business in totality, and therefore lots of products are being developed and launched almost on a monthly basis at the moment across the continent. And we are seeing adoption happening at a faster and faster rate, which is really amazing for small business owners.
We know that in South Africa, you know, the informal sector is quite substantial. What sort of work are you doing as Yoco to engage those sectors to move further towards the digital route?
You know, what's interesting about the South African environment is that from the consumer side, it's an incredibly well-banked population. You know, around about 80% of South Africans either have a debit or credit card in their wallet, and therefore have the ability to pay for goods and services with a debit or credit card. Now, the other side of the coin is that up until the last 3 to 4 years, only about 9% of business in South Africa actually accepted debit or credit cards as a form of payment. So there was a huge gap between consumers' behavior changing and the ability to accept at a small business level. And that was largely down to how hard it was to get the basics of digital payments and a card machine for a small business owner. So we have really tackled that single problem in a very singular manner, so that now really anyone can get a card machine in the space of 15 minutes, to be honest with you. You can buy one of our card machines at 3,000 retail partners across the country. You can walk into a store and purchase. You can buy it online in 15 minutes if that's your preferred way to purchase. We even have agents in the informal environment who will come to your door and sell you a card machine. So it's really reducing the friction in the purchase process, which has made the biggest difference. You know, you simply need an ID document and a bank account. It doesn't even need to be a business bank account. So this is our single-minded focus, and it has been for a long time. And we are now seeing the adoption in the more informal sector of the market, who sees the value of offering card payment services in particular, because their customers are starting to demand it. And that is something which is new and has really come in the last 2 years.
Yeah. Which African markets currently excite you? I mean, we know, for example, Kenya, for example, has been way ahead of the curve when it comes to digitalized payments.
Yeah, Kenya in many respects has leapfrogged, because of the state of the banked population in Kenya and because of the lack of card penetration, they've leapfrogged all the way to sort of mobile money. Nigeria is an incredibly large, hot market at the moment. There's other SABC countries that are certainly rapidly growing. South Africa remains the one fairly unique African case where you do have that really high banked population with high card penetration. And then we're looking at markets on the north of Africa, such as Egypt, etc., Morocco, where there is a more similar nature to the South African market as well. In totality, though, the amount of activity happening across the continent is really diverse and extreme, and almost no African country is not being touched by a fintech at the moment.
Matt, thank you very much for your time and insights there. Matt Brownell, he's the VP for Commercial at Yoco.